And welcome to this week's Market Update, where we dive into the most significant economic events and market trends shaping the week ahead. From inflation reports to central bank decisions and corporate earnings, let's take a closer look at what's driving the financial markets. And we'll start with the UK, and the spotlight in the UK this week is the UK labour market data. That's due for release on Tuesday at 0900 hours, that's GMT +2. Last month's report surprised the market as both employment change and average weekly earnings came in higher than expected. The data raised market concerns about imminent interest rate cuts by the Bank of England, temporarily strengthening or at least supporting the British pound. As you can see from the chart, it's had a bit of a torrid run so far. However, the broader economic slowdown has kept the currency under pressure. Following last week's dip in UK inflation to 2.5%, hopes for a February rate cut have grown. That 2.5% was a little bit of a surprise. I think people expected it slightly higher. Now, this week's labour data reflects a robust employment environment. Analysts might reassess the likelihood of an imminent rate cut, which could provide some short-term, probably much needed support for the Great British Pound. Okay, and secondly, we're going to shift to Canada, and the inflation rate for December is also going to be in focus on Tuesday. It's 3:30 p.m. GMT +2. Now, this data could play a critical role in shaping the Bank of Canada's interest rate decision, which is due on the 29th of January. Now, in November, as we can see from the chart, Canada's annual inflation rate eased to 1.9%. However, the trimmed mean core inflation rate remained elevated at 2.7%. So whilst the 1.9 headline was great, that 2.7 still above targets. That raised concerns about the extent of rate cuts the Bank of Canada may implement. Now, the Bank of Canada's already lowered its policy rate by 175 basis points since June 2024, with economists forecasting an additional 25 basis point cut this month. Any surprises in the inflation data could trigger some significant volatility in CAD Canadian dollar markets, particularly the US dollar against the Canadian dollar pair, which has recently traded within a narrow range after reaching highs not seen since March to April back in 2020. So be aware of that increased volatility and don't forget your risk management techniques. Okay, we're going to traverse the globe slightly and take a look at Japan. And on Friday at 5 a.m. GMT +2, the Bank of Japan is set to announce its interest rate decision. Now, analysts are widely anticipating a 25 basis point hike. Now, on the 15th of January, Governor Kazuo Ueda expressed optimism about Japan's wage growth outlook, suggesting that the primary obstacle to further rate hikes would be market disruptions triggered by comments from Donald Trump. And we know Donald Trump has been talking about implementing tariffs, for example, as soon as he comes into office. Ueda's remarks bolstered the yen, causing a decline in the US dollar against the Japanese yen pair. If the Bank of Japan unexpectedly decides to hold rates steady this week, it could introduce significant volatility in the yen market. So again, potential for some volatility. Do not forget your risk management techniques. Okay, next up, and we're going to briefly turn our attention towards commodities and gold in particular. Gold prices have been moving within a narrow upward channel since the start of the year. In fact, we can see that quite clearly on the chart. As usual, this is mainly down to geopolitical tensions and, again, uncertainty surrounding Donald Trump's economic policies when he comes into official power this week. These remain the key drivers of gold's safe haven appeal. Obviously, other issues around the world, those geopolitical concerns, are still in the forefront of everybody's minds. This week, market moving news such as we've spoken about already, the inauguration of Donald Trump, and further developments perhaps with some of those geopolitical tensions could lead to some quite sharp fluctuations in the gold market. So traders should keep a close watch this week on what's happening with gold and make sure you're taking in as much information as possible. Okay, we'll end this week's video with taking a look at the corporate earnings statements that are coming out. As mentioned last week, we are smack bang in the middle of corporate earnings season. These are reports for the fiscal quarter ending December 2024. So what's on the horizon this week? Well, on the 21st of January, Netflix and the 3M company will release their results. Now, Netflix is expected to report earnings of $4.20 per share, representing a staggering 99% increase year on year. Now, with revenue projected to be at $10.12 billion, that itself is a 15% growth compared to last year. So those figures will be closely looked at, and the performance and the background behind that performance as well. Now, in contrast, 3M's earnings are forecasted at $1.66 per share. That represents a 31.4% decline year on year, with revenues expected to drop by 27.7% to $5.79 billion. US dollars. Be interesting to see how the markets respond to those figures. On the 22nd of January, we've got Procter & Gamble and Johnson & Johnson announcing their earnings. Now, Procter & Gamble is projected to post earnings of $1.87 per share. That's a relatively modest 1.6% year-on-year increase, with revenues rising 1.1% to $21.67 billion US dollars. Meanwhile, Johnson & Johnson's revenues are expected to grow by 5%. That's to $22.45 billion US dollars, though its adjusted profit may decline to $2.04 per share from $2.29 per share in Q4 2023. Those are probably the biggest ones to look out for this week. Okay, so that's it for now, and that's your comprehensive market update for the week. Stay informed with our latest insights on Market Pulse that can be found on our website, where we delve deeper into these events and more. Thanks for watching, and best of luck with your trading in the week ahead. Bye for now.